Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down. Another down day today. Market was down yesterday, and we see that continuation to the downside today. S&P is down 0.7%. Nasdaq is same. Semiconductor got hit harder today, down about 1.5% there. Dow is down 0.7. Small caps did get hit. 2% down day. Banks down about 2% also. Energy also got hit hard today, about 2.6% energy. But energy is actually leading the entire market year to date this year. So we're seeing a little bit more distribution there today. Transport is actually up. Transport is actually doing pretty well this year to date. Surprising to see that transportation is green today. Biotech is flat. Emerging market is down about a percentage there. Grayscale Bitcoin continues to see weakness there, 2% negative. Gold and silver and miners are slightly green here. Oil is down about 1.3%. Dollar treasury bond is up a little bit. VIX popped 8% with the equities being down today. Let's stick with the S&P. We lost the short-term moving average, and this is the first time since right here, since March 26th, we lost the short-term moving average here. So at this point, with another gap that's open, a down gap that is open while this gap was open, so we can look at this as a breakaway gap, downside, continuation gap. We're below the short-term moving average. As of today, benefit of the doubt actually goes to the sellers in the short term. If we do see any kind of move to the upside, there's going to be resistance here, the short term. There's going to be resistance there. The best case scenario for the buyers is getting up here, fill this gap, right? And then cultivate the equal highs. And this is kind of, this will be damage control, right? Buyers understand that there's a little bit of damage that's occurred. So need to at least do a little bit of damage control by filling the second gap, pull back, because once the gap gets filled, it's going to act as resistance. Gather its momentum, use that short-term moving average, and then go after this gap. I'm actually giving you possible scenario that's gonna help the buyers if they want to get out of this mess that we are in the last couple of days, right? If not, what the bears obviously want to do, they want to continue in this momentum with the lower highs and lower lows. Now that benefit of the doubt goes to the sellers in the short term and the micro term. So any of these short term moving average could act as resistance or that gap area. It's better if these gaps do not get filled. So if you're a bear here, you want to make sure these gaps do not get filled. Once that one of the gap gets filled, that selling pressure slow down that much. Just keep that in mind. And this gap's still going to provide some hecticness and some problem for the buyers, but it'll be better for the bears if the both gaps remain open. If you want to see this lower highs and lower lows of the downtrend to continue, right? But keep in mind, I'm talking about short term and the micro term. And so, if we look at the big picture, which is important, and this is something that I've been preaching about, for 12 months straight, that let's not get too emotional when you see these kind of moves. But again, nonetheless, I want to show you guys, just giving you quick back testing here. So that was when that short-term moving average was lost. That was when the short-term moving average was lost. We lost the short-term moving average here. We lost short-term moving average here. We lost short-term moving average there. So those squares are just how quickly market got right back on made all-time high. It only take a day or two, right? But here, there were some times though, right here and here, where things got a little bit more, it took maybe a couple more weeks or so, right? So that's the circles, right? Those were where we did lose that short-term moving average, and then it took more than a couple of days. This one looked like it just took about a week though, quickly got up. But this one, it was hectic for about a couple of weeks. This one was hectic for a couple of weeks here. And this one was, hectic for about a week and a half or so. So you can see that looking at the midterm, looking at the big picture, as we zoom out, you can see that there were instances where we did lose that short-term moving average, but how quickly market was able to get back up and make new all-time highs. So keep in mind though, when you zoom out here, we're definitely in a midterm, long-term bullish uptrend. And so when you're in that sentiment, in that environment, you'd be surprised how quickly things can change. I mean, things can continue to escalate to the downside. There's a gap. Bears want to fill here, that little gap here. Things could continue, but as I've given you this potential scenario for the buyers to repair its damage, right? First, foremost, we gotta reclaim the short term and then fill that gap. Bears obviously want to see this thing continue to cultivate lower highs and lower lows. So those are the things you're gonna look for. You're a bear, you want to see short term and the gap area. Make sure this gap doesn't get filled. We make sure the price continues to cultivate lower highs and lower lows. You're a bull, your first objective is to make sure to fill this gap as quickly as possible. Let's check out that oscillator, see if we can extract any more information. So the oscillator here, so if I zoom out here on the oscillator, you can see that we're now where? We're getting into the extremely oversold level. We've never came this low. So last time we hit this level was March 4th. So let's check out what it was like in March 4th, right? So it was right here. So what was March 4 like? So it's interesting to note that last time we got into this deep into the oscillator, the oversold level, and that was March 4, but that was kind of a little bit more bearish sentiment back then. And you can see we had multiple lower highs and lower lows, and it took almost a month of a downturn here. This thing pretty much took about a whole month to get down to that level. It's interesting to note that today, it's just 2 days a move that we got to that extremely oversold level. And I think the reason why is because we've seen this straight up vertical move, so that the impact that is given that it gave to that oscillator, it's a little bit more severe, because this was definitely more, you know what I mean, the short term of thing, this was a more severe downtrend. This is just kind of like, we're just potentially getting started, but we're already at extremely oversold, so I expect some kind of a oversold bounce because where it says. So I'm expecting oversold bounce tomorrow. Only question is that short term is going to act as resistance? Is that gap area is going to act as resistance? Again, bears, you do not want to see buyers filling this gap, because if this gap gets filled, that's the first layer gone. I mean, those two gaps are gonna be your lifeline for bears, but that one of the lifeline is gonna be gone if that gap gets filled. So let's see how the market plays out this week. We'll see how the market behaves with the oversold bounce tomorrow. We'll go from there. Enjoy your evening and good luck trading tomorrow.